2016 has been a year of twists and turns. Unprecedented landslide victories, lot of volatility in emerging markets, and a big change in monetary policy by central banks. But opportunity always comes with crisis, and how should one really maximize on this current opportunity? So without getting into calling where markets are headed in 2017, the focus of this show would be how should one be investing and what is the best way to capitalize when it comes to the current market action. And to discuss that, I've got master investor, Mr. Raamdeo Agarwal, Joint Managing Director of Motilal Oswal Financial Services. Fantastic to have you back, and always a pleasure to connect with you.
Yeah.
You've always said that there is no point in analyzing the past. It's always time to move on and understand where we are headed. So where are we headed from here? Because now political changes are happening in the world, and political changes will always lead to economic changes.
I'm much more kind of a closer home, and here in India also we are going through huge gigantic change, and economy is most likely to move from a complete cash kind of based economy to much more formal digital economy, and it's an opportunity, and of course there will be a pain on the way, and the times are uncertain right now, and that is what is reflective of the market to start with. So the 2017 will definitely start with a lot of these uncertainties on the back, and as we move on, as we go to quarter one, quarter two, I think the pent up demand and vigorous economy will come back. So it will find its own momentum as we go into the future, because this economy always, economy is always a complex adaptive system. It will adapt itself. Whatever new rules of the game is there, for the payment, for the deliveries, or for whatever, it will readopt, and with a vigor it will come back. So when it comes back, we should be prepared for that, and this is the time, in uncertain time, we should be building our portfolios.
Historically, we've seen that markets and economy, they may not follow a different path.
Yeah.
So there are periods when economy is bad and markets have gone down, and vice versa has happened. So going forward, do you see a situation where the economy may not do anything great, but markets may actually move up?
See, it's not so much to do with the economy, it is about the productivity of the companies, because even in a very stagnant economy, you can have a few wonderful companies. The issue is that right now it's a kind of a standstill for a lot of good companies also, and that is what is creating uncertainty. Otherwise we are pretty happy whatever happens with the Trump, with the oil, with the drought and famine, and interest rate going up, inflation coming down, inflation going. These are very, you can negotiate all this, but at this point of time, there are certain things which you don't know. This has happened first time in at least my career, and I think in your career also. Yes. So we don't know how to think about it.
That sure.
Yes. So we don't know how to think about it. That's the source of this thing. Otherwise, we are pretty happy with the bad things also. Second thing is that price. You have to figure out, in the stock market, it is very difficult to figure out how much is built into the price. Everybody knows to buy a fantastic business run by fantastic management, but these companies are available at full price. So if by chance it is over discounting the goodness of the company, in that case you cannot make money even in a great company. So you have to be, and at this point of time it is becoming difficult to figure out how much correction will happen because of current slowdown and uncertainty, and then at what is the right price to buy. But generally we have seen that in uncertain times, if you buy something, you hit a good bargain. So probably for a long-term investor, this uncertainty or little weaker market is the biggest boon one can ever have.
Good news and good prices, they rarely come together. Right now, news is bad and prices are getting better.
Good news and good price never come together. So news is bad, price is good.
But our price is really good. The stocks which you own, they have not fallen more than 5-10%.
Yeah, so it still is falling. And then time is passing. See, in a growth company, every quarter is very powerful. You are supposed to be growing 6-7%, and one is the earnings have grown 7%, and the stock has fallen 7%. Means actually fundamentally it has become cheaper by 15% in just 3 months. So another 5-7%, and you might be in a huge margin of safety.
So in terms of the portfolios and the companies you track, are you getting a sense that the margin of safety is on your side, or you're waiting for better entry points?
See, right now, as I said, the thinking power, the clarity of, in stock market you have to be a very clear thinker. there should be very clear thinking about everything. So quality of, see, and sources of value are two: franchise and growth. Okay, so franchise of all the companies are intact. What is hurt is the immediate growth, not the long-term growth, but immediate growth. So how much the immediate growth is hurt in next 3 months, in next 6 months, or next 1 year? How much it is hurt? That I don't know. I mean, we don't know even how much growth has been impacted for the month of November and December. That will come to know when the first quarter result comes, and that's why first quarter result probably will set the tone for rest of the year.
Whereas long-term markets, they always map earnings and they're slave to earnings. You have to deal with short-term. Short-term is sentiment. Medium-term is liquidity. The sentiment is not supportive, and liquidity at a global level is turning against us. That zero interest rate regime is over. Once upon a time, there were interest rates. So I worry about the fact that interest rates globally may move up. Like Buffett said, that markets can handle everything but interest rate rise, because that acts as a gravity, and that gravity factor is now there.
Quite, I mean, what is happening you can see, but that's something which we can handle.
Okay, we can handle it.
We can handle, and even the earnings which we talk about, long-term earnings are set and all, but long-term is made up of small short terms.
Yes.
So we are negotiating right now the next 3 months and next 6 months. That seems to be little uncertain, but most of the companies are destined to be what they want to be in 5, 7, 10 years. Nothing is going to happen to whatever were to happen to those companies, but just that there is a kind of a break right now. But after that, and that's why I'm saying this is the time you can get some very interesting valuations, and I mean, you must not miss this opportunity.
Has your portfolio strategy changed because what's happening in the world and what's happening here?
Yeah, no. In fact, portfolio strategies were decided few years back to take care of this kind of times. See, good portfolio strategy is one which can take care of bad time. Good time, everything will do well.
Of course, yes.
Good strategy as well as bad strategy will do well. Your strategy should be so good that even bad time is not that painful. So we are testing now what we did was right or not, and it's all very clear. I mean, we'll get to see next 6 months that how well our strategy has.
So the whole concept of buying quality is now helping you, because quality is it may not be the first one to rise, but it will be the last one to fall in this kind of a market. So buying quality stocks is rewarding you, because in this market, an HDFC Bank, a Sun Pharma, or an Asian Paints, these are the names which are falling less.
Yes. So quality is always the biggest protection in bad times. The people's confidence in the future of good companies will always remain very high, and in bad time, not such a high quality companies, they will go under. And I think I'm very clear that post demonetization, when remonetization happens, full remonetization happens in next 3-4 months, the stronger companies, those which are more ethical, better organized, better systems, much more digital in payments, I mean, those companies they'll gain share in the businesses, and they'll come back much stronger.
So I'll talk about the areas which you track and which you understand. You understand consumer business, you understand autos, you understand financials, and all these sectors will now see a reboot, not because of demonetization, but the way processes and things would change now.
Yeah.
So let's start with autos. What do you think will change for autos now?
Autos, nothing will change. See, in auto, see, if you talk about personal transportation, car and motorcycles, I mean, people here are still buying first time. So you can't defer that much. I mean, the replacement buying, you can say, okay, we'll not do it in 16, we'll do it in 17 or 18 or whatever. But most of the people, at least in car segment, they're the first time buyers. Bulk of them are 50-60% people must be buying for the first time a car. And they cannot, I mean, they will defer for 1 month or 2 months, but they'll all come back. So the demand, so India is the last large market for the cars. I mean, China is doing about 20 million. At some point of time, we should also be doing 10-15 million. So it's one of the most promising segment, and very interesting competitive structure is there, where 50% is with one company, the rest all 50% is with 25-27 companies. So it's an very interesting opportunity in automotive.
Now I'm going to first focus on two-wheelers. You track two-wheelers, you've owned two-wheeler stocks in the past. Now we have two-wheelers earlier we would classify as one category. Now within two-wheelers you got a divergence. Eicher has got a weighting, and Hero MotoCorp I've been told has an inventory of 6 lakhs. What are the dynamics in the two-wheeler sector looking like? Will aspiration work or will mass transport work?
It's your competitive positioning. Say Eicher is very uniquely positioned. among the two-wheeler companies, because they have a segment in a cruiser bike, powerful cruiser bikes. It's a category in itself, you know. So they are 100% out there. They have 5-6 months waiting list. So I think they should emerge stronger, because whenever the slump in demand happens, for them those cushion, their demand will not slump. But as far as other categories are concerned, now rest of the categories also, that 15-16 million we do, in that also there are two segments. One is the motorcycle, traditional, and second is the scooters. So scooters are coming back because the install base is very small and urbanization is taking place. So scooters are becoming very large force, and in last 6-7 years, led by HMSI, Honda, original Honda, almost 30-35% of the market has shifted towards that. So real volume shift is not so much to the cruiser bikes, that's about 6-7 lakhs only, but here it is the scooters which have become almost 30%. And I think the largest selling two-wheeler is Activa scooter, maybe number 2 or something like that. So that's the kind of resurgence we are seeing in motorcycle two-wheeler market. I wish HMSI was listed. It is not listed, so you have to play some proxy here and there. But so one opportunity was clearly in Eicher, and second opportunity could have been HMSI, but it's not there. But Bajaj is there in between, TVS is there, and Hero is there. Traditionally these 3 players. So depending on whose export strategy or scooter strategy or motorcycle strategy, see it's about 1 or 2 products. Who gets that winner product, which very rapidly, I mean, Bajaj is made up of their export strategy and Pulsar. The Pulsar really gave them the new life. So Pulsar and the export strategy. TVS is all sorts of thing, but 1 or 2 winner products from say R&D of Hero, where they are spending 500-600 crores per year. They can hit upon 1 or 2 new products because they have fantastic marketing, distribution, and people love their brand and customer service. So, I mean, you are just watching what can happen in 2017. It's a matter of time. You have to keep your eyes open.
The idea which we were discussing was that there is businesses or companies, they are destined to go higher and the promoters are like determined to take them higher. What falls in that kind of a category? I look at your business.
Yes.
If I look at your business, it's the hard work of Motilal ji and your hard work which has taken Motilal Oswal as a firm to great heights now. So as an investor, I'm sure apart from analyzing your own firm, you're also analyzing other companies. So what falls in this category?
Yeah, so we look at the say this destined and determined. The framework, it is more for the people, management. Some management, they are destined to be rich. The second generation, third generation, father or the running businesses, given you a running bank, a running factory, running brand.
Second generation, third generation.
You're born billionaire, so you're destined to be rich. But people like us, who are just starting off in the marketplace, so whether the management is determined to become rich. There are 2 ways to become rich. You are born rich or you are determined to become rich, and the system allows you, the market economy allows you to become rich. So, and then same with the businesses. But businesses, I would like to invest in a business which is destined to remain rich. Say like banking. I mean, world over banking makes money. You borrow at 5%, lend at 8%, 10%, and you make a lot of money. Now, who is the determined management to make, say HDFC Bank? In 96, they got the license. They were determined. I mean, in next 20-22 years, they have created a bank. 20 years? Yeah, 20 years. In 20-22 years.
Plus 4 lakh crore balance sheet.
They have become second most precious company in the country. In one lifetime, one CEO. So, I mean, that is a kind of a determined. I mean, and tens of the guys, they got the license. Where are they? And half of them have been eaten away by HDFC Bank itself.
Of course.
I think 2 or 3 of them. So what is important is, where is the determined management? Where is the opportunity and where is the determined management? Once you see that this is a determined management, and you get enough track record. HDFC Bank you didn't buy in 96 or 97 or 98. You could buy at any point of time. So we have to find, and India is it's an emerging economy. So you will find a lot of emerging companies. So when the new business successfully emerges, under the leadership of a new determined management.
The challenge with buying a HDFC Bank or a Asian Paints could be, everything is great, which is Q, G, L, but P, price.
Yeah.
Ultimately, your entry price will have effect on your exit price. Pricing is not on your side. I mean, HDFC Bank is trading at 3.5 to 4 times book. You got a similar number for Asian Paints, 30-35 times. Nestle company we owned in the past, crazy P multiple. So as an investor, here is a great business in front of you. You know that if you buy it, you will make money. But as a fund manager, you also have to care for the returns. How do you manage this dichotomy?
So that's the biggest art form, to understand. See, once you know that it's a good business and good management, then the real thing is, how's the price? Is the price also fully priced? And you're not looking at the value today, you're looking at value 5 years or 10 years out. So if you think in 10 years, this company, which is say, 20,000 crores today, can it be a 2 lakh crore worth company 10 years henceforth? Sometimes you get this insight that yes, it can be. Or if it is 1,000 crore company, can it be a 10,000 crore company? Once you get this kind of thought, then you have to only look at the price, whether the price is somewhat higher, or is it even if the business goes 10 times, the stock price is already taking care of that, like it is 100p or 80p and all. So your return is going to be very mediocre. So you have to be very careful about understanding the price. That what expectations are built into the price. If all the story which you are talking about is already discounted by the market, there is no fun. You have to be ahead of the crowd. You have to know what the market doesn't know. Because the moment market knows about it, market will build into the price.
And one of your wealth creation studies, you mentioned that the art of buying stock is not to identify something from the Nifty 50, it is to identify which 100 companies or which 200 companies can become the next 50 great companies. That's the pond where you like to fish.
Yeah.
So how are you fishing in that pond? You bought RBL, you bought PNB Housing Finance. I'm looking at the last disclosure data. So are you getting a sense that HFCs and some of these so-called new age banks, they can scale up?
I mean, that's one area where we have somewhat better understanding, and it looks that their opportunity is perpetual. India is still not fully banked. Maybe 40-50% is the under banking, formal banking coverage. My village still doesn't have a bank. So I think it's a long way that the whole country will be covered by banks. So I think the opportunity on the banking side is very large. It's a growing economy. It needs a lot of credit to be lent, a lot of mortgages to be underwritten. So the opportunity size is very large. But where is the bank which has shown that they can earn money, but there is a huge runway ahead, which can be the next HDFC Bank, which can be next very large opportunity. So that's where the management will differentiate. Opportunity remains there.
Is RPL a call only on valuations? Because
no, it's not
a call on valuations.
It's just a general, as I said, it's a good business run by determined management. Now, I mean, it's early days. We'll see what really happens, how they deliver to the expectations, and people will remain very, suspicious whether this new management can deliver. But that always happens, when a completely new management, new name of the brand, is there. I mean, it takes time for anybody to, but by the time people get comfortable, the price goes up so much. Once the cherry consensus happens, then the price is very high. So you have to, when you see the opportunity, you meet the management, you feel that there is something happening here which may not be there in the price.
So, again, we are using a lot of Buffett examples because you always publicly said that, look, he's my guru, he's my mentor, he's one I've followed and I've become successful.
Yes.
Buffett believes that you should always buy when there is fear and sell when there is greed.
Yes.
You will never get great prices if there is a cherry consensus.
Yes.
You should always buy when there is a lot of despair.
Yes.
So where is cherry consensus in this market and where is despair in this market?
No, so the market as a whole today is depressing in the sense that there's a lot of apprehension about what will happen this quarter, because ultimately markets have to pass through the short-term challenges also. So right now we are passing through our short-term challenge in terms of Q3 earnings and slightly softer beginning for the Q4 earnings. So that apprehension, now how to think about it is kind of challenge. But I'm quite sure that this challenge is maybe 6 months for another 1 or 2 quarters, maybe 3 quarters. But the companies, the good companies, they will emerge first. In fact, they will be able to negotiate the problem. Say like a company called Maruti. Maruti will be able to negotiate this problem much better than many other companies. Because I'm quite sure the demand is going to be there. Demand is always going to be there. But the issue is that how well you are prepared to maybe give some more discount, maybe change the product mix, maybe send, if the South is better prepared for digital economy, send more cars out there. I don't know what all they will do, but I've generally seen the stronger companies, they find ways of negotiating this uncertainty much better. So we must see, in the quarterly results and our interactions with the companies, where is that strength and who is going to become stronger.
I just want to ask you a question on asset allocation. Whereas we can talk about for identifying multi-bagger ideas, we can talk about 100 baggers. Do you think now it's time to really seriously check on asset allocation? Gold is not going anywhere. Real estate with the current environment will not go anywhere. FD rates are 5-6%. That's nothing post-tax. So by default, do you think money is going to migrate to equities and one should buy equities?
You are asking the wrong guy. I've been always 100% equity guy. So don't ask me. You have to ask some wealth manager how they are feeling about it. Because I could never figure out how, 15% is index return, compounded post-tax, and long term is zero tax. In no country you get this kind of opportunity, where if you hold for more than a year, you get your long-term taxation free, you get your dividend tax free. It's crazy. So coming into equities in India is a blessing, but you have this volatility. People have to be able to bear some.
And that's the reason markets pay you the premium, because you have to.
So almost you get 2x. Almost, if you are getting about 6-7% in fixed income, you get about 14% in equity, and that too in a passive way. Active will be even higher. So, making about 15-20% post-tax on a slightly longer term basis, say more like 5-year basis, should not be a problem. Should not be a problem. There are a lot of managers who can deliver that kind of.
The return has been above 25%. Can you repeat that?
I don't think so. It will definitely get moderated over a period of time. Shorter terms, you can, the base effect and election, hope rallies and all, they can enhance. But over a period of time, like right now, we are seeing as the growth is getting cut, the performances are getting a little bit of challenge. So longer term, the base rate and whatever your process superiority is there, that only will show up. So 15 plus, say 8 or 10 or something like that, that will come. But even higher than that, I think it is just a matter of time, it will go away.
The mega bull run which we all were waiting for, Modi got elected and we thought, mother of all the bull run will start. That bull run hasn't started. I'm not feeling it. Index returns from last 2 years have been flat. How far are we away from that kind of a sizable bull run?
The beauty of those bull runs are that nobody knows.
Yes.
Because I remember in 92, it was not about the earnings. We might say that let the earnings come and the bull run will happen. No. It could be just the influx of a lot of money. Everybody wants to buy equities in the matters. In 2000, the Y2K bull run, it was all about page views and all views. Yes. Actually, the earning companies, Berkshire Hathaway itself came down from 74,000 to 38,000. So, market can be very irrational in this kind of bull run.
But you've sold a Berkshire Hathaway shares.
Yeah, I sold out. I realized that they earn about, that is not going to give me more than 8-10%, 12% kind of return.
That's great for if you're in America because interest rates are 2%,
yes,
but that's not good for India.
We look for 20-25% kind of return. So the moment I realized that in no case it is going to make more than 8-10%, I said, let me not stay there.
So irrespective of whether it's demonetization effect or what's going on in the world in terms of the economic policy, interest rates, the portfolio which you currently have, what happens to price is a function of sentiment. Yeah. But earnings is what you can indicate and you can predict. Do you think a 20-25% earnings growth for your existing portfolio is entirely possible for next 3 years?
That's how we've designed.
Okay.
That's how we've designed. But 1 or 2 quarters will be a little challenging.
So 1 or 2 quarters could be bad for Indian markets.
Yeah, but I hope it delivers that.
So the returns next year could be back-ended. They may not be front-ended.
It will be definitely back-ended. It will definitely, and it can accelerate to everybody's surprise.
So another 15-20% kind of an index return back-ended for next year cannot be ruled out.
Definitely cannot be ruled out because you are starting from a low base. For 2 years it is staying here. So you have a very high probability. I would say 80-90% probability that we will have damn good return in next 12 months. But it will be, as things look, it will look to be much more back-ended than front-loaded.
In life I've read enough about Buffett. We call it Buffettology. We read about Munger. We call it Mungerisms. Let me get an original quote from you today, and we will call it, Ramology.
For us it is QNG, buy quality, don't negotiate on the quality and buy growth at a reasonable price. you'll do very well in India.
That's the way how you made money, and that's the way how you think you'll be able to make money for
That's how we have been
your
making
unit
money.
holders.
But we have coded it now into QGLP. But the way to go is buy quality, don't buy low quality. That's the way. I mean, right now, I'm absolutely peaceful. You know, the stocks are falling, even my stocks are falling. But I know they're all temporary, you know, they'll all come back.
So let me use this Hindi line before we wrap the show. Like you said once to me that quality एक बार गिरती है, downside is temporary, and for kachra the upside is temporary and the downside is
permanent. Yeah. So in quality, ups are permanent, downs are temporary.
Okay.
In kachra, just the reverse.
Just the reverse. Really appreciate your time. Always fantastic interacting with you.
Thanks for coming.
That's it on this edition of Outlook 2017. I'm Nikunj Jalmer signing off. Thank you for tuning in and thank you for watching the show.